what we're going to see, I think, is a growing realization in the investment establishment in America that America has got a problem. And it's not just the foreigners looking at it, it's America, American institutions seeing this as well. So who needs a crisis? This will generate a crisis. Of that, I'm absolutely certain. And to an extent, if you're running funds in America, you'll be looking at this and thinking, well, we got to de-risk our portfolios. So what do? Get out of credit. Get out of credit. That's my new mantra. And the only way you get out of credit is to get into real money. And guess what? Real money is physical gold.
Authorities can no longer downplay the importance of bludgeoning U.S. debt, as large hedge funds, financial advisors, and wealth managers are now questioning the strength of the U.S. economy and the government's ability to continue to meet its debt obligations. The U.S. national debt surged significantly at the start of the 2025 fiscal year. According to data from the Treasury Department, the debt rose from $35.464 trillion on September 30th to $35.668 trillion on October 1st, marking an increase of $204 billion in a single day. This sharp rise highlights the rapid pace at which U.S. debt continues to grow, exacerbated by government spending and reckless money borrowing. This increase of $204 billion reflects ongoing pressures, including rising interest payments on the national debt, government borrowing, and other spending obligations. The relentless climb in debt poses long-term fiscal sustainability concerns, particularly as debt-to-GDP ratios continue to soar. Last week, BlackRock, the world's largest asset management firm, released a paper discussing how it was preparing for a $35 trillion Federal Reserve crisis with Bitcoin. The firm said its wealthy clients are getting more and more concerned about the situation and searching for alternative assets that will help protect them when shit hits the fan. For Alasdair MacLeod, the head of research at GoldMoney, only hard assets like gold can survive the coming collapse. During a recent interview with the Money Levels show, Alasdair explained that central banks and other foreign investors first realized the urgency of the situation. In contrast, local investors were still caught in the normalcy bias, believing the reign of the United States would continue forever. Today, these same investors are questioning their faith in the U.S. government and the dollar's supremacy. According to Alasdair, this means we are on the last leg of the financial system and just on the verge of a nasty collapse that could wipe out trillions of dollars overnight. We will present clips from Alasdair's interview, in which he shares some dire warnings for investors. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
I mean, first of all, I just want to correct what happened in the Great Financial Crisis is that everybody went for safety. Now, in those days, safety wasn't gold. Safety was the dollar. And the result was that gold fell from over $1,000 an ounce down to, I think, something like 680, really quite quickly. But, once that initial shock had passed, gold started powering up, and it was hitting new highs for the next 2 years and ran up to a high of 1924, something like that. I think that was September 2011. So this is fundamentally different. Now, you're right, we don't have a visible crisis at the moment, but there are a number of things in the background which, just because it hasn't sort of hit the headlines, we are aware that there are problems. We look at the central bank's balance sheets. They're heavily into negative equity. We look at the situation for the commercial banks. They are highly leveraged and therefore vulnerable to any shock. We have inflation is a continuing problem. And if you look at the budget deficits, and particularly if we get a downturn in the economy, they're just going to run away. I mean, and that is the source of inflation. Another source of inflation, of course, is excess consumer spending. And if you look at what the consumers are doing, they've tapped out their savings and, they've increased their credit card debt. So basically, everything is still driving prices higher, even though the economy is in, if you like, not very good shape. So overall, on that side of things, things don't look that smart. And then if we go internationally, you can see that the dollar has a problem because the Chinese and the Japanese are no longer buying US Treasury debt. The Chinese in particular are doing what I've just said the hedge funds are now doing in America. They've been selling dollars. And guess what? They've been buying gold. And so have the Chinese citizens. So have the Indian citizens. Now, I think that's died down a little bit now. But it's the idea that the U.S. Treasury is going to be able to fund itself from foreign demand. Forget it. That's not going to happen. It really is not. Now, this means that the U.S. Treasury are in a debt trap. And we can see this. So, okay, we don't actually have a visible, sort of huge, great Lehman moment, but we can see that there are these problems. You've got the problem, and it's a huge, great problem with the Middle East, because if Iran gets into this, they'll close the Straits of Hormuz, and then the price of oil is, well, think of a figure and double it. I mean, we could be looking at $200 a barrel easily. So, that's not a sort of shock that we actually want. And I think this is why, actually, the Allied forces, NATO, America, Britain, whatever, are holding back and desperately trying not to get sucked into this conflict. So that's roughly where we are. I mean, there are all these huge, great problems. We know the problems are there. We know that the foreigners are no longer buying US treasuries. And perhaps while foreigners understand that the US government is in a debt trap from which there is really no escape other than really slashing government spending way down. I mean, surplus immediately next year. That's the only way out of this. On that basis, foreigners, I think, some of the institutions, some of the investing institutions, hedge funds and so on and so forth in America are actually getting worried about this funding problem. They can see it.
Alasdair MacLeod's analysis centers on the belief that the Western financial system is on the brink of a significant collapse, driven by mounting debt and instability in the banking sector. He points out that the cracks in the Western banking system are growing more evident, especially as central banks continue to grapple with inflation, interest rates, and the massive debt burdens facing countries like the United States. MacLeod suggests that these issues, combined with fiscal mismanagement, will lead to a breakdown that could force a transition away from fiat currencies. In contrast, he argues that emerging powers such as Russia, China, and their allies are positioning themselves for this potential collapse. According to MacLeod, these nations are accumulating gold and preparing to transition to a gold-backed monetary system, as opposed to relying on fiat currencies that can be easily inflated. He sees this as the only sustainable solution to the erosion of public trust in the existing financial structures. If such a system were to emerge, it could radically shift the balance of power in the global economy, reducing the dominance of the US dollar as the world's reserve currency and giving greater prominence to gold as a cornerstone of monetary value. But Alasdair believes it's no longer a matter of if, but when it happens.
Candidates seeking election always promise more spending. The reality when they get elected, if they've got any sense at all, is to tone that down and try and control the spending and blame it on the last lot, if you like. But I'm not sure that even this modicum of sense is actually in either of the two leading candidates for the coming presidency. I mean, I think President Trump or ex-President Trump, if he gets elected, I think he's going to rely on cutting. I mean, I'm just going on what he said. Cutting taxes, corporation taxes, income taxes, and replacing it with tariffs, more tariffs. But I mean, this was what they did in 1930 with the Smoot-Hawley Tariff Act, which killed not only the American economy but the global economy. So, and then you got Kamala Harris, who is making statements like, we're going to stop price gouging and all the rest of it. I mean, she's going down a route which politicians have gone down. I mean, Diocletian did it. He came out with an edict of maximum prices in about 305 AD. And the result was that nobody in Rome could do any business. I mean, the butchers and the bakers and all the rest of it just shut up shop because they didn't want to get, hanged, if you like, for breaking these rules. So they just shut up shop. And the result was that Rome had to empty because there was no food in Rome. So everybody left and foraged in the country, you know. And Kamala Harris is the last of a very, very long line of politicians who have recommended this sort of policy. Now, again, she could be just electioneering, but I get the feeling that she actually doesn't know what she's talking about. I mean, she is a lawyer, not an economist. You could argue if she was an economist, it would probably be worse with today's bunch of economics so-called experts. But when you get lawyers in charge, they're completely clueless, and this is not good. So, while I fully accept that, after the election, they deal with reality, and the story might be slightly different from what they're telling before the election in order to get elected, I really don't see much hope for the US economy on the election. I would throw in something else, Daryl. I'll throw in something else very briefly. The debt ceiling is due to be refixed, I think on something like the 6th of January or 3rd of January. I mean, literally when the new president takes office. Now, if I was a sort of free spending candidate and I end up get elected, I want to create headroom. So I want to put the ceiling up as high as I bloody well could. And we're already at what, 35.5 or something trillion. How about 40?
The U.S. Treasury Department will begin deploying extraordinary measures on January 2nd, 2025, when the current debt limit suspension expires at midnight on January 1st, 2025. These extraordinary measures refer to financial maneuvers the Treasury can use to avoid default, such as pausing certain government investments and reallocating funds to keep paying the government's bills for as long as possible. However, these measures are a temporary fix and will deplete over time, especially with the federal government running large deficits. Once those resources run out, the U.S. will hit the so-called X date, when the federal government will no longer have enough funds to meet all of its obligations, such as payments to Social Security, Medicare, military salaries, and interest on the national debt. Crossing the X date without raising or suspending the debt limit could result in severe economic consequences, including a government default, which could disrupt financial markets and erode confidence in U.S. creditworthiness. This is the exact scenario analysts like MacLeod have been discussing for ages, and it's playing out right in our faces. Do you believe the time is almost up for the US dollar and Western dominance over the rest of the world? What happens if that happens? Please share your thoughts on Alasdair MacLeod's predictions for the US dollar, gold, and the global economy in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on the notifications bell for more videos. Thanks for watching, and see you in the next one.